and we'll answer those at the end. I'll hand to David to get us started.
Thank you, Tia. Thank you. Hello and welcome. I'm your host and moderator, and thank you for taking the time out of your day to join us in what's the second of our three-part series as we talk about privacy, compliance and data breaches. Today, we'll look at cyber insurance trends and what insurers are looking for under our latest conditions, and plus how to put a value on data privacy and compliance. So hopefully afterwards, you'll leave with the benefits of a better understanding and hopefully you'll feel a little bit more empowered to take some of these thoughts back to your organisation and perhaps lead some conversations and even possibly get some programs of work underway. And to make sure that we're helping you as best as we can with the session today, and for you to make the most of having access to the specialists we've got. Please feel free to drop any questions into the Q&A box that we have enabled for the topics that we have today, or just simply share your thoughts and struggles and experiences, and we'll answer those. We'll answer your questions at the end of today's session. Please, I always like to say, please don't worry about taking notes or too many notes. We'll send the session's recording out to you via email after today's session. So without further ado, let me introduce you to your panel who will take you through the topics today around privacy, compliance and data breaches. But starting with myself, I am David Christmas, the founder and managing partner of DataBench. We are a data privacy and security and software provider, and our focus is to help companies automate their data privacy and security functions and to help a business to meet various compliance and jurisdictional obligations. So our first speaker for today is Tony Venning, who is the director of Bentley's Insure. And I'll hand over to you, Tony, and perhaps you could start by telling us a little bit about yourself and Bentley's.
Thanks, David. So Bentley's itself is an Australian network of independent firms providing advisory and accounting and tax and audit services. So we work with businesses around the country in terms of helping them achieve their objectives through a range of advisory and specialist services, including legal advisory, corporate recovery, wealth management, superannuation, R&D tax incentives, HR advisory, ESG, and of course, insurance and risk. And so the insurance and risk area, which I look after for Bentley's, really is more around advisory in terms of helping clients understand their risk needs, their risk profile, so they have knowledge around really why they're buying insurance and how they can best protect their business in terms of mitigating their exposures to uninsured financial loss. And so that area of specialisation has been part of the firm now for some 5 years. And today's topic on the webinar site has been very much front and square of that in terms of helping clients understand their exposure and how insurance can help treat that. And certainly we'll be going into some of that further today. But we're certainly pleased to be part of the webinar, and hopefully we can add some value. So, Magda, I'll pass to you now.
Thanks very much. So my name is Magda Blanchardwood. I'm a special counsel in Watton & Carney's cyber team. Watton & Carney is a leading insurance and risk firm here in Australia. And we are in the cyber team, I'm focusing on building out our advisory practice. So we're particularly interested in data breach and cyber risk mitigation measures, and essentially how Australian organisations across the spectrum can uplift to meet the challenges that we're seeing today.
Great, thanks, Magda. So that leads us nicely into our slides that we've got for today. And what I think you'll find is that over the last period of time, we've certainly seen a change of the conditions that businesses are experiencing out there. We're seeing more sophisticated cyber attacks coming through. So what I might do is pass to you initially, Magda, and perhaps you can share with us what your findings have been around some of the trends that we're seeing out there in that cyberspace.
Yeah, perfect. And so we sort of view this as important context setting the current cyber trends so that we can start to understand how privacy and data breach risk looks, because the starting point of this conversation is always, what's the risk? How likely is it that it will affect me in my organisation, and how likely is it that it'll affect the kind of data that I'm managing? So I think that context setting is really important. From that perspective, we know, and we'll look at stats a little bit more in a minute, but we know from the OAIC ACSC stats that the leading cause of data breach, so of privacy pain in Australia, is still criminal activity, so cyber incidents and particularly ransomware. From that perspective, what we're seeing is ransomware activity is ongoing. The frequency, depending on quarter to quarter, the frequency of activity can come up and down. I don't look at that as much as what we're seeing over time is that there's not ultimately year on year a reduction. There's no sense that this is going to go away. The severity of incidents themselves has increased overall, both in terms of financial exposure, also in terms of the tactics that are being used by threat actors. So specifically, we see the fact that we don't really have, if we have a ransomware attack at the now, it almost always is accompanied by data exfiltration or a threat of that, as well as other tactics being utilised and rolled out, including things like, in addition to encryption, in things like wiperware, the wiping out server logs or records of other kinds. While we are seeing fewer organisations paying ransom, at the same time, those ransom demands are getting more difficult to manage in some ways. So particularly threat actors using tactics as the frequency of payment comes down, using tactics to try to increase the likelihood that organisations will pay. So for example, it's sometimes called triple extortion, but for example, targeting key clients or executives in an organisation to try and up the pain, in addition to a threat of publication of data. So another interesting factor is that we're still seeing a spread of ransom incidents across the different sectors of the Australian economy and across organisational size, but there is a little bit of a shift now back towards larger companies. We had seen that swing away in the last year or two, so a little bit more of a swing away from larger and into small medium, whereas before that we'd seen very much targeting of large companies. What we'd now say is that while we're seeing a temporary swing back towards larger targets, we haven't seen a reduction in attacks on small and medium as such. It's just an interesting, we watch these things over time. It's just an interesting development. What my best sort of analysis would be that it doesn't matter where you fit in the economy, you're still very much in the spotlight. But at the same time, these trends can sometimes give us an idea of whether there's a greater or bigger risk. And from that perspective, in terms of how the threat actors are getting in, still very much the key things that we saw in place are pretty constant. So rapid exploitation we've got there of critical public vulnerabilities. So unpatched software applications still right up there in the top 3 ways that cyber attacks and data breaches happen. Ultimately, they're attributable to software vulnerabilities that are unpatched. We're also seeing a continuous focus on phishing, as well as, oh, sorry, if you could just go back one slide for me, I'm so sorry.
Sorry.
No worries. Thank you very much. So still very much in focus is phishing and the other key vectors as well. Oh, sorry about that, I just lost my place for a moment. So we have no reduction in incidents like business email compromise as such, just that ransomware remains the leading cause of privacy, ultimately privacy data breach type incidents. Having said that, what we're seeing is regulators taking an increased interest in this space. So we obviously know we've got law reform, where we talked about this in our last webinar, we've got law reform firmly in focus. However, what we do have in parallel is regulators of all stripes, not just the OAIC, actively involved in incidents. That includes APRA, ASIC, and a range of other regulators through the health regulators. So that environment, managing through the implications of a privacy incident, it's more complicated than it ever has been in the past. And that is driving both increased cost as well as complexity and reputational risk. Finally, I think a couple of other little points, which is we do have a rise in incidents involving disgruntled insiders, so disgruntled employees, contractors, etc. So that risk from inside is still very live, not just from outside, a criminal sort of threat actor sitting off in an overseas jurisdiction. So those types of, I suppose you can call them garden variety threats, are still very much an issue. And it means that from a strategy perspective, we tend to be needing to think about cyber risk, privacy risk, data breach risk from a number of lenses. That's a good time for the next slide. I'm sorry, David.
There we go.
Thank you. So we've captured most of this in talking about the trends on the previous slide. I just wanted to underpin that first one. Little graph on the left shows you that malicious attack is still the leading cause of data breaches. So when we're thinking about privacy risk, still very much the leading cause, but not the only. And I just wanted to focus on that human error part as being particularly important. So I think next slide from this one. Thank you. In terms of industry segments, just an interesting point of focus there. We still have the leading sectors have not particularly changed in the last few years. The stats move around, but health, finance, education, and professional services, as well as managed service providers, remain in our top mix. So those kinds of sectors are those that we are always particularly interested in and focused on. And the reason I think that they stay up there in terms of reported data breaches is they're typically managing data on behalf of a really broad customer base. So they're both an attractive target from a criminal perspective, and there's also just broader opportunities for data breach to occur. I'll head back to you, David, for the next section.
Okay. So that thank you, Magda. So that leads us into perhaps Tony.
Yeah.
From an insurance perspective, I'm sure you're seeing some trends in the same space that perhaps probably complement what Magda's been saying there.
Yeah, absolutely. And I think what's important in terms of understanding the cyber insurance market as well is to understand the relative immaturity of the cyber insurance market and how it currently exists. In that, I mean, really, it's been in existence since sort of late 90s, early 2000s, and has evolved rapidly over recent times. But as a product class, I mean, cyber insurance is still relatively immature when you compare it with other classes that have been around through the sort of industrial age, which have established form and policy wording and underwriting criteria. And the cyber insurance market at the moment really is still going through a rapid evolution as it matures as a product, but also as insurers, as businesses also evolve and understand what they need to be doing to address the threats that Magda's just talked about. And I think it's important in terms of the context to put it into some numbers. And when you look at, say, the cyber insurance premium pool in terms of what we place into, it's still relatively small. And if we look at on a US basis, the pool is estimated to be 22.5 billion by 2025. So that increases on 25% year on year. In terms of the global insurance market across all lines, it's 7 trillion. So it really is a drop in the ocean. And so while cyber is getting all these headlines at the moment, it's still relatively a small product, and it continues to have rapid evolution in terms of what it's doing. And that can create an area where there's it's quite lumpy in terms of what cover is offered from insurer to insurer, but also the capacity, exclusions, etc., that are also included. And that's really important to understand in terms of that. If you look at the Australian market, that's estimated from the Actuaries Institute to be 200 million. And 200 million is of a 53 billion total insurance premium pool in Australia. So again, it's about that 0.3% mark that cyber makes up, say, in the Australian market of the total premium pool. And I think that just gives, again, context in terms of what we're dealing with. And I think when you lay that against some of these sort of uninsured or underinsured risks that we face in terms of what we're seeing is that when you look at those stats around SMEs, say 20% of SMEs are reported to only 20% have standalone cyber insurance, and that increases with larger businesses, sort of anywhere between 35 and 70%, depending on who publishes the report. But again, there's a large uninsured risk in terms of what we're seeing in cyber losses. And a recent report, again from the Actuaries Institute, was talking about the total economic loss in Australia as a result of cybercrime was 33 billion in the last financial year. And when you overlay that against the 200 million premium pool that you see in Australia for cyber, you get some type of context around how much uninsured risk there is from a cyber perspective, and hence it really falls back on the need for business at the start of it to actually manage that risk. And yes, insurance is going to continue to play a role, but there still very much is that uninsured risk which business has to take on in terms of managing. And so I think insurance has got a long way to catch up in terms of actually addressing this exposure, and this exposure is only increasing. We're going to talk about some of the evolution of that risk exposure that we see in cyber that's evolving. So insurance is going to play catch up, but in order to do that, what we're seeing is that insurers are demanding more and more risk management and tighter cybersecurity controls on business before they're prepared to give capital away to, if you like, insure some of that risk. And so what we're seeing is limits are being reduced. So previously there was limit sizes of 5 and 10 million are more readily available, but these are being restricted significantly. There are towers that can be bought above that, but it is really critical to be able to show strong cybersecurity controls across the organisation at a sort of board cultural level. In terms of the pricing, in recent years we've seen triple-digit increases, and I think some business owners and executives have felt the pain of that over recent years, particularly in certain sectors. But thankfully that is starting to stabilise, but only if you can actually demonstrate that you have proper security controls in place. And so that is of absolute paramount importance, that the business can demonstrate that as you're approaching the market, because if you're unable to demonstrate that, you simply won't be able to buy either the cover capacity or certainly the broad cover that we would recommend a business have. And the other thing that we're seeing where businesses aren't able to demonstrate strong cyber risk management is the increased use of exclusions by insurers. And so, as Magda just alluded to there, with some of the common threat or attack vectors, ransomware is right up there. And where you're unable to demonstrate that, we'll see insurers either carve out ransomware or certainly limit it in terms of what cover you're able to have, whether it be social engineering or cyber fraud, other carve-outs that insurers will make if you're unable to demonstrate you have proper security controls in place. So it's really important to be ahead of the curve in terms of what you're doing about managing your risk in order to access the most competitive cyber capacity that's in the market. In terms of the claim trends and what we're seeing in terms of where insurers are having losses, and therefore where their underwriting focus is going, is historically it's first party losses, so the business interruption costs that we'll see, the losses of to revenue and net profit following a cyber event which are being hit. But by far and away the biggest cost to insurers is the incident response cost, and these are the services which insurers mobilise the moment you become aware that you've been breached. And so generally that'll represent legal advice, IT forensics, crisis management, PR consultants to help assist in terms of initially responding, mitigating and containing the risk, whilst there is an assessment of what the threat is and indeed if there's ongoing exposure. And of course, the business interruption follows that. In terms of the compliance costs, that's a lot to do with in terms of the notification or the obligations you have as an organisation in terms of under the Privacy Act is what you should be doing, and that goes hand in hand with those incident response costs. What we haven't seen to date is really the cyber liability claims come through in terms of the class actions that we may see in the US, and also the fines and penalties. But following the higher profile Medibank and Optus incidents, and now more recently Latitude as well, these are getting more and more attention, and we're going to touch on later about some of the regulatory change, but this is where we see insurers turn their focus to in terms of their underwriting criteria and what they're wanting to see in risk management. So we're going to delve into that in a bit later, but really is starting to be the focus. What we'll do now is we'll move on to what insurers are going to look for in terms of risk management.
Yeah, so I think Tony, just to sort of quickly put a pin in it, I think what you've covered there is all just incredibly important information, and it's a lot for a business to sort of take into consideration. So I think it's fair to say that the responsibility for business, certainly over the last period or the last 2 or 3 years, that cybersecurity risk management piece, it does represent a really large shift in businesses' priorities.
Absolutely.
And you just alluded to that. I mean, there's a huge amount for a business to think about. And generally, it would be safe to say that it will take some time for the effect of those highlights that you've considered, to come into effect for a business. So with all of that in mind, can I ask you then, what do you think that a business could possibly try and do with all of that information to try and stay ahead of what's coming their way?
Yeah, but I think the key thing for an organisation at the moment is, and what organisations need to demonstrate, is there's a cultural change and a cultural shift and attention at board level in terms of managing risk. So it needs to be a shift from doing the, if you like, reactive to proactive, and seeing board management or board level commitment and governance in terms of how they're managing their cyber security requirements. And that's not being just an organ within your organisation, but that's being dictated to by regulators in terms of the focus that needs to happen in terms of boards having that commitment to cyber security. But one of the key areas that we really want to impress is that as we move forward and this continues to evolve, and it's so rapid in terms of how the risk is evolving, is that organisations need to stay ahead of the curve, so don't be caught behind it. And that means that now, in terms of how you manage your data, in terms of data control and the data destruction, how you manage those supply chain risks, because it's so interconnected, that's where insurers are looking to actually manage that risk, because that's where they see it moving forward in terms of the big exposure, is that aggregated risk in terms of the supply chain, and also data privacy and compliance in terms of the potential regulatory exposure and fines and penalties, which have increased exponentially following the more recent high-profile cases. So let me just go to the next slide, David.
Tony, while you're doing that, I wanted to pick up a point that you made there, because I think it's really, really important. We've certainly seen the regulatory attention shift, looking, specifically with the OAIC, APRA, ASIC, looking at prompting organisations to look at supply chain and particularly data holdings by way of exposure. In my view, when we haven't yet reached that maturity necessarily with risk management, and particularly with underwriters looking at that aspect of risk management, are we starting to see that? And do we think that's where, in your view, we're going? I think it almost certainly has to go there, because the exposures will be there, particularly as we talked about last time with the reforms to the Privacy Act and more coming.
Yeah, that's a really good point, because at the moment, because of that immaturity in the market, each underwriter will have different underwriting criteria that we need to address. But when we try and be proactive about it and address it, we do want to put that in there. But most underwriters that we're dealing with aren't putting the focus that we expect they will in the future on the issue of regulatory control and cultural management, if you like, but also how you're managing the data as well, and how the proactive controls you have in place in that regards. Because so far it's been more traditional on that sort of business interruption and the incident response cost that we're sort of seeing, but we think that attention's certainly going to turn to the exposures around privacy and data management. So that's what we're talking about when we say organisations really need to invest in terms of privacy and compliance to stay ahead of the curve, but also to be able to proactively demonstrate how they're dealing with it, because that will, I think, become a key measure in the next 12, 18 months as insurers turn their attention to what is a more recent exposure in terms of the magnitude and the quantum can come from that area. So it's a really good point. I think that's where we're going to see it move in the next 12 to 18 months. So don't be caught behind the 8 ball, get in front of it now in terms of making sure that you're not only managing it internally, but you're able to demonstrate really proactively how you're managing it. And I think it goes on in terms of what we're wanting to always be in a position when we're dealing with clients going into the market is the philosophy and the culture of organisation is that prevention is better than a cure, in that organisations are having a really robust and strong cybersecurity plan that is there to actually prevent, mitigate. Insurance is there to complement. And one of the things we talk about when we talk about insurance and is what insurance delivers outside of this capacity is actually to deliver some of those incident response services that are critical in terms of providing an organisation with real experience and expertise in terms of how to respond. Because as businesses, there's not a lot of expertise or should we say experience in terms of practically responding to a cyber event, whereas insurers, because of the frequency that they deal with it and the panel that they have assembled, are experts in the area of responding. So, but to get that insurance and to get those access to those incident response services, you're going to need to demonstrate strong cyber security controls are in place. It's a real key factor. So you can just go to the next slide, David. So, and we've got I think a sort of varied audience today in terms of maturity itself, in terms of cyber risk control. So some of these are basics, and we'd expect the majority of businesses to have some of these in place. But in terms of some of the, if you like, cyber risk hygiene that we're going to be looking to present to insurers, but work with clients on, is the key is to have a clear and documented information security policy and incident response plan. So the information security policy should just simply have a written document in terms of policies, how you deal with your data. So policies, procedures and rules in terms of how your organisation manages it, and together with that incident response plan. So some of you would be more familiar with things like business continuity plans, disaster recovery plans. It's basically the when, who and what is going to happen following a cyber event. It needs to be really clearly documented. And then just going back to some of those fundamentals, and even through the ACSC's, Australian Cyber Security Centre's Essential 8, it's still something that we just pump out. And there's still a large amount of even larger organisations that don't actually have the Essential 8 as published by the Australian Cyber Security Centre. So I strongly recommend that organisations look at that. But things like your automatic software and application patching, and Magda alluded to how often that actually causes an incident previously, and that flows onto your virus anti-malware solution, regular data backups that are offline and disconnected from your main network, have a documented phishing training policy, have MFA enabled for system access, and utilise a commercial grade password manager. We're seeing this more and more, but the days of storing in a spreadsheet or anything like that is over. And if we aren't able to demonstrate that you're managing it in a commercial way, then insurance simply won't be able to be there to assist. And probably the last 2 points where we're seeing this evolution of where we have this interconnected supply chain risk, where a lot of businesses will use a third-party contractor to assist them with their IT, in-house IT services, and it's critical to have an IT management agreement that governs how they are to perform those services and what expectations are there to deliver that commitment. And the last one there is to have a clearly documented data and privacy compliance policy in terms of how you'll deal with it. So they're the sort of key points around risk management. But if you're able to do that, well, then certainly you're in a better position to actually then get into the cyber insurance market to get some broad coverage. So if you can just go to the next slide, David.
Just before we go ahead onto the next slide, Tony, I just wanted to ask you on the second last point that you made there, which I think is important.
Yeah.
Are you finding that businesses are able to provide or display any sort of evidence of how they're assessing their third-party providers? Are they providing a security assessment? Are they providing evidence of what the third-party providers are doing in that space? Are they able to sort of carry content towards you to show how they're addressing this?
Generally what it'll be, so if we're presenting a risk, then we would at the very least want the third-party providers to be able to have a level of cyber risk security and controls that the insured that we're with, the client that we're working for would. So we would say that should be built into the agreement. At the very least, they should have the same level of controls, and that would need to be evidenced that they have that, and that's part of the agreement. That should be built into the agreement, as well as, of course, evidencing that they have appropriate insurance, and not just cyber insurance, but professional indemnity insurance, as well in terms of the services that they're providing.
And also with the first point around incident response plans, are you finding that the third-party providers are also bringing this information forward to display if in the event of their data sources being breached, how can they prevent this sort of carrying further into the main provider?
Yeah, absolutely. Sorry, mate, do you go?
No, I was going to say, I'd just pick up that point, because it's something, I actually think it's the next level of evolution of really good incident response planning, where you actually work with your key partners, vendors, to do that preparation together. Both too, and it picks up a little bit of your IT service management agreement point too, because both you need a matrixed understanding of what everybody's accountabilities are. And bear in mind, you often have multiple service providers, your own accountabilities in the mix, and that clarity about who's doing what. And in fact, with who's doing security, because that's often there's a bit of confusion about the fact that IT services inherently mean somebody else is doing data management or security for you, but they don't unless that's explicitly provided. So that sort of matrix, getting to a detailed matrix view and then taking it another level and doing joint incident response preparation, to me is the logical next evolution. We do see vendors included in incident response plans and in sort of simulation workshop type exercises, but it tends to be a little bit more of an afterthought. That joint work, I think, to me is a really good place to take preparation further if organisations haven't already done it. Get the basics right first, by all means, but then that's going to be next level. And I just picking up that point you were making, this is particularly important for heavily regulated organisations, for example, APRA regulated entities. Lots of scrutiny coming from APRA and other regulators on those arrangements, including in the context of CPS 234 tripartite assurance audits of just what are the governance and arrangements and controls that are on those third-party security obligations. So how are you checking what they're doing? Yeah. How are you verifying? How will you know if they don't do it? Those kinds of questions, and it is being flushed out through those regulatory review processes that for many organisations, those controls are perhaps not as effective as they could be.
I think through some practical examples where we've managed some large scale claims in regards to third-party service providers is I'd highly encourage, in terms of organisations that have concerns around an insurer's response services, actually leaning into it, because what we've seen is where by bringing in the insurer's independent response team, there is a level of independence around, okay, what happened? How are we going to make that threat assessment? And some of it is actually working with those third-party providers about where is the threat? Where did the attack start? Because you almost want that independence, because that sometimes truly there's no bias or concern about perhaps where it did start. And I think where we've seen those incident response services come from the insurer side, it does have that level of independence, if you like, in terms of making it a true risk assessment. So certainly it also helps in terms of documenting that incident response plan. So at every level, you know where someone's going to respond, whether it's internal, third party, but generally what we highlight and recommend as part of those is that those insurer incident response plans is certainly very high up in terms of the first number that you call to ensure that there's an appropriate response. So if we turn to attention to what can be covered, and again, within the audience, there may be differing knowledges of what cover is available, but just in terms of a high-level overview, particularly in the context of, I suppose, the emerging nature of cyber insurance, is the coverage provided by each different insurer can vary quite differently, as can the structure of the wordings, because it is still relatively immature. But we thought we'd just run through, I guess, the if you like, the main sections of cover that we see more consistent across the different providers. And it really starts with those first party losses, so business interruption, loss of revenue. But we do see some differences there in terms of the definition of what actually is business interruption or loss of revenue or loss of profit. We also see some differences in terms of the indemnity periods, in terms of when the cover can apply. So with some, it's how long for the period your system's down, others it can go to 90 days, others right through to 365 days, or even until you return to the position you enjoyed prior to the loss. So it's really important to understand what type of cover you're getting dependent on the needs of your organisation, because if you need a longer indemnity period, it's critical that you're placed with the right provider. Obviously, there's cyber extortion and ransomware. So for now, that is still legal. There's obviously debate around whether that should be ongoing. But probably an important point here, and it gets those incident response services, is that with that cyber extortion and ransomware becomes specialist consultants who can assist. Social engineering fraud, where basically there's deception in terms of funds transfer or financial crime. We've touched on the cyber incident response costs in terms of how you get it's covered under the policy, the cost of those specialist services responding. The regulatory exposure in terms of dealing with your obligation under the Privacy Act, the fines and penalties, which have increased, as I said, exponentially, and Magda's going to run through some of that later, but it is quite alarming in terms of what powers the Commissioner now has. And of course, there is that data breach and cyber liability, which up until now has been relatively untouched in Australia, but we expect that to change. So that's just a very brief rundown in terms of what can be covered. And of course, we're happy to sort of take questions or certainly talk after that if anybody wants more detail on the specific sections they may be interested in.
Okay, thanks, Tony. Just moving on to our third and final topic, which I think is really important if you put into context the first two topics that we've addressed today. And the business that we're talking to out there are finding it very hard to put sort of a fit for purpose value on data and privacy compliance, because it can be very confusing with several factors coming into play, like internal sort of competing priorities, roles and responsibilities being sort of uncertain and unclear in this time of change. Plus, we're seeing a lot of businesses have legacy systems in place. And in the most part, some of these are built and designed sort of pre-SaaS, pre-software, pre-cloud offerings. So we're finding that businesses are unsure on how to proceed. Magda and I were sort of talking, and Tony and I were talking yesterday. We're also hearing businesses that are actually finding themselves a little confused, and they've ended up with some unrealistic expectations around some of the latest initiatives that they've put into place. So you might have a business that is looking at putting a new solution in place, but they might be thinking, well, didn't we address that last year? Didn't we allocate money in our budget for that last year? Why are we still looking at this problem? I thought we'd solved it. So by solving solution A, they've still got problem B and C to address, and they're sort of finding themselves unsure of how they've got themselves in this position. So with that in mind, Magda, sort of how do you think what do you think is a good way that business can start to put a value on their compliance focus?
Yeah, great. And I think this is where we're trying to sort of bring together that understanding of how does the current regulatory environment, the law reform agenda, what we're seeing in terms of risk statistics out there align with how organisations, with various kinds of responsibilities and roles within those organisations, how they can think about addressing privacy and compliance risk and talking about it in ways that resonate with senior executives. So it was well publicised, and it was a bit of a focus for us in the first webinar, so I won't spend too much time talking about the penalties, but the starting point from the conversation is getting data compliance, getting privacy compliance wrong is very risky in terms of the maximum penalty that you can pay for that in Australia now. So obviously, a serious or repeated interference with privacy, we know now that I'll use the 50 million number there. You can see that there's a more complex sort of penalty formulation there. It's worth up to 50 million per breach for you, and that's one number to bear in mind. I like to think about this as it's not just the Privacy Act that we're thinking about, and I think that becomes particularly important when we talk about the fact we've got a wide variety of regulators taking interest. So we know that the Australian Competition and Consumer Commission took Google up in terms of non-compliance with essentially what comes down to privacy and data issues, when Google wasn't being clear about how it was collecting and using location information. So the discrepancies between saying on an in Android phone settings, in one set of settings, hey, where you can switch off collection of location data, and actually somewhere else saying we'll still collect that data unless you do the following things. That led to a $60 million penalty. So that's Google, large company. We don't expect necessarily penalties of that magnitude for smaller entities. We also have other regulators that we mentioned in the mix, including the corporate and regulated entity regulators, ASIC and APRA, with their own sets of legislation, similar penalty frameworks if you're not compliant with the various controls that they effectively need you to have. So are you providing the services you provide efficiently in ASIC terms, or alternatively, are you complying with the various prudential instruments in APRA terms? So when you aggregate, I suppose, that risk, you can see that there's the potential penalties from a regulatory perspective stack up really quickly, and you don't have to be as large as Google. There's just, the fact is of the current environment that there's multiple avenues that they can come from.
I think that, Magda, on that, I just think it's a good point in terms of the magnitude of it, because from an insurable risk perspective, and what we're seeing and what the common challenge, and we had it with Europe for some time in terms of GDPR and the fines in Europe, and now we're seeing it in Australia, is there simply isn't the capacity in terms of clients who want the protection. Sometimes even with the best security, we can't find that capacity. So it's so important to, I think, take heed of what the message you're giving in terms of the exposure in the insurance. Maybe I deal with some of it, and certainly the stronger controls you have in place, the more we can get. But yeah, it's a real concern in terms of the size of the potential penalties, because, you know, from an insurance perspective, we're unable to at this stage, in most cases, purchase capacity that we need or organisations want.
Yeah, that's a very good point. The average $10 million limit, it just doesn't get you there. And we'll talk in a minute about class action risk, because obviously that's floating around out there as well. So the total costs can quickly of an incident can quickly eclipse available capacity, and that naturally turns to, well, how else do you manage this risk? And it's got to go to managing data compliance and privacy compliance, in addition to the cyber controls that we talked about already. Because without those measures, without targeting those specific areas, you're leaving a risk on the table, which however you for your organisation classify that in terms of likelihood, or the magnitude is now higher than it's ever been. So that, I think, is the way we sort of think about, I suppose, penalties and the coalition of willing regulators that we see out there. They are necessarily forcing organisations to bring compliance higher up the privacy compliance higher up the stack in terms of prioritising the expense. And I think that went to something you were talking about, David, which was these choices that organisations have to make that are just really difficult. We've got in terms of multiple priorities, but naturally it cannot drop off. At this point in time, it would be the wrong moment to bring this down and say, okay, we'll get to that later, or that particular solution can wait, because I think you don't have that kind of time. And this is something that I think we'll have to watch for small business as well, because obviously it's mooted that small business exemption will come out. So more, I suppose, more areas of the Australian economy will be exposed to those privacy data regulatory risks.
Yeah, and I think also it's very pleasing to see that the OAIC is now being put into a position where they've got a much stronger support position from the federal agencies, from the federal layers, and hopefully that extends down to the state layers of the OAIC as well, because the business that we're talking to and the smaller business layer feel that potentially the OAIC is a natural go-to between what they're doing and the various federal or Commonwealth-based layers. And they're starting to feel like the OAIC is now supported enough to be able to talk to and seek advice on, without having to sort of engage at the Commonwealth layer and without having to engage with the big stick regulator. So are you seeing that this is a good thing? Are you seeing that businesses are feeling that the OAIC is now potentially becoming sufficiently resourced and empowered to work with business out there?
I haven't seen enough of this yet, and this is something that that we talk about a lot from a WK perspective, is that we've got a bit of a cart before the horse in Australia, in the sense of the penalties coming before the assistance, before really good, clear security standards and data rules, so that we all know, well, how high do we have to jump? But I was pleased to see in the recent federal budget that there is allocation to start assisting smaller businesses to build understanding and capacity, because I think this has been the thing that hasn't been very well done to date. Certainly, from a regulation perspective, a measure through SOCI Act and other reforms, there was a measure set for big business to critical infrastructure specifically to evolve capability. But I think education and a focus on uplift for small and medium business in Australia is probably the right focus, and we're only really starting to see that, in my view. So certainly I don't know that I necessarily think of any of the regulators yet as providing that. They provide a range of resources which are really important, but I don't know that I see them yet leading that evolution of capability across the economy.
Okay, that's good thought. Tony, anything for you on that front before we move on to our next slide? You're just on mute there, Tony. So.
Sorry, David, only to support what Magda said in terms of the evolution of risk in terms of playing catch up, both I think on a government support level, but also on an insurance level as well, in terms of, whilst there is some coverage there's capacity issues, as I mentioned, and the underwriting criteria is still yet to switch to that focus. So I think it's evolving, and business is the best advice to stay ahead of the curve, most definitely, by putting the investment in now. Yeah, good. Okay.
Look,
so that leads us into sorry, Magda,
please go ahead, David.
So I guess this leads us further into some of the investigations that have been underway. Perhaps Magda, you could talk to us on this one a little bit.
Yeah, so look, I think really all we want to say here is that emphasis is on directors and board accountability, and Tony mentioned this earlier as well. There's a very clear expectation that there is board accountability for these risks at the end of the day. That has a couple of implications. One obviously means, and this is not new, that compliance, data compliance, privacy compliance, as well as cyber risk are very much governance issues, and that clarity of roles and responsibilities, and that clarity of what an organisation has done about the risk and how and what measures it's implemented, what it's left on the table, and why it's made those decisions, has never been more important. I think that's feeding into a couple of things, and interestingly, from a risk management perspective, and again focusing back on insurance for a moment, it does mean that, and we haven't seen this sort of play out strongly yet, but it does mean that there's an interesting sort of crossover issue that's going to come up for many organisations between things like cyber insurance on the one hand, professional indemnity, which Tony mentioned previously, and then also potentially D&O, if we see regulators like ASIC doing something we call stepping stone liability, building out breaches of the law more generally into allegations that directors, for example, have breached specific duties that they have. So this is an area that we're still watching. It's certainly something we expect to evolve over the coming years.
Yeah, I think on that, it's really important to understand that cyber insurance as a standalone policy won't address all your exposures that emanate from cyber risk. So you will need to ensure that directors and officers policies appropriately cover the organisation for any claims which may come against directors in terms of not fulfilling their obligations, as well as not a negligence-based claim in terms of the professional services that you offer that results in a cyber loss, or certainly a legal claim against you. It needs to be done in concert together in terms of making sure your organisation is protected. I just want to be clear that cyber insurance isn't sort of the silver bullet across everything, but it's certainly an essential part of it.
So on the class action front, Magda, what are some of the key points that you've seen most recently?
I think we can just put it this way. this is certainly a relatively recent evolution in the Australian landscape, and it makes navigating a serious privacy incident, so for example, a cyber incident leading to a mass data breach, as we've seen in recent times, makes it quite complex. We're obviously seeing attacks on multiple fronts in those cases. That is, individuals who are the ultimate victims of those sorts of incidents are quite rightly want to understand what will be available to assist them with the costs they may have incurred, etc. And that is driving this class action landscape, where the tolerance of people for data breaches has essentially run out. There are a lot of barriers to a class action ultimately succeeding, not necessarily to it being initiated, but certainly to it ultimately succeeding to give individuals a recovery. And we won't, in the time we have available today, spend a lot of time working through that. I think it's the maths here that I think we usefully should look at for the purposes of kind of understanding compliance and the value there is on compliance. Even if you have a very small payment, let's say $100, $500, if you have millions of individuals and a class action, that becomes a really large amount of money, and for many organisations, a sort of game-ending amount of money. So I think class action risk, firstly, it's not going anywhere, and it will be years, unfortunately, before we really know how effective that is as a means of getting individuals compensation, but also how the risk landscape, including the insurance landscape, needs to evolve in response. But just because of the tail on these, so I think the Royal Commission, some of the Royal Commission, the main Royal Commission class action is going to take, I think it's going to trial in August. It took about 5 years to get there. So it gives you the sort of idea of the timeframes arising out of incidents. It's going to be a while before we know, but the risk isn't going anywhere, and it's a really expensive risk. So the best protection we have against it is boring old compliance, unfortunately. So for example, not holding on to data that we don't really need, not gathering that data in the first place, and again, all of those controls that we were talking about earlier.
I think also one of the things where we're talking about the potential exposure, and you're talking about the legal defence costs.
Yeah.
Try to think of it like putting your organisation in the best possible position to get as much capacity as you can for what is commercially viable, because I think as we've spoken through the last hour is the exposure is only growing. So put yourself in an organisation to access capacity to the maximum extent that you can for your organisation, because it's not a matter of if, it's when. It will happen, and your organisation needs to be best placed to be able to deal with that. And whilst insurance can't cover the full potential of the exposure, it can certainly go a long way to assisting, and I think it's a key component part of addressing it.
Okay. So with coming up to 4 to 5 minutes left in our allocated session, I might just take us through our last slide here. Tony, certainly from a data management perspective, you'd be keeping this in mind when you're talking to businesses around what sort of evidence can you provide, how can you work with us in trying to address these increasing premiums. What are you sort of talking to organisations about when you look at this component?
Mainly what we're talking about is there's a competition for capacity. Okay, so when we go to insurers, it is a limited market. So we need to be able to demonstrate that organisations are ahead of the curve in terms of what they're doing, and this is the next frontier, if you like, of risk management. So where we can see that organisations have a clear process in terms of how they manage their data compliance, it enables us to be on the front foot in terms of making that risk stand out to the insurance market, and where capacity is very tight, it can be the difference. And so, like I say, with the next frontier being what underwriters are looking for, it's a key part of making an organisation stand out in terms of others and making that an attractive risk so that you can access that capacity at a more commercially viable premium. So at the moment, I would say it's a lot to be developed still, and there are unfortunately there are probably too few organisations that are on top of it. But those that are getting the benefit, I think, of getting recognition from the insurance market in terms of risk selection
Yeah, I think it's still a very important message for businesses to understand data mapping and actually understanding what they have under their stewardship. And I think a few years ago, business would see all of the data that they were holding as an asset. But I think now it's important that they view their data as not only an asset, but also a liability. And the business that we're talking to are actually struggling to understand what they should keep and what they should perhaps put into cold storage or what they should jettison altogether. So I think that data mapping has to be in the forefront of businesses' mind and get an understanding of, okay, we haven't had customers or we haven't had interaction with this particular person for more than 5 years. So we need to make an intelligent business decision around whether we keep this information, and if we do, why are we keeping it and for what purpose? So surely businesses must have a sense of this when they're trying to put their risk management plans in place. Are you finding that businesses are sort of talking to you in those sorts of conversations to go, if we get rid of data from 5 to 15 years, is that going to help us reduce premiums? Is that, Magda, are you seeing businesses saying, surely this must help us create a much stronger position for ourselves?
I'll kick to Tony on the first question, but I think I loved what you said about intelligent decisions, because nobody is saying don't treat data as an asset, don't collect it, don't use it for business purposes. It's that understand what you're sitting on and collect and use what you need, and be explicit about that all the way through policies, etc. So then you don't go wrong. Where you go wrong is drifting, and I think that's sort of being flushed out also in the recent incidents. We're certainly hearing, and again, I'll hand to you, Tony, but we're certainly hearing from underwriters and from the broking community that the amount of data being held matters to premium. So we don't necessarily have, I think I don't have a view that the next level of sophistication matters as much, but that part matters.
I think in terms of the records held, yes, and I mean, it is a key factor in terms of the number of records held. What it gets down to then is how far can you drill down in terms of the records that you hold, in terms of the type of records that you hold, the detail of those records, the type of personal information that you hold. Because if you can't, then a general rule is insurers will assume the worst. But if you can properly segment it, drill down and profile it, it's like with any risk, the more we can profile it and that we can actually drill down and demonstrate an organisation manages it and is on top of it, then the better outcome. But I've got to say that up until now, there hasn't been a great story to tell in the majority of cases in terms of organisations being right across that, because I think it's still something they're grappling with. And that's where I think, this next frontier, to stay ahead of the curve, organisations have to start investing in this, because if they don't, then they'll start to become reactive in terms of accessing appropriate insurance that deals with it, because insurers simply won't want to take the risk on as claims become more and more frequent in this area.
Yeah, great thoughts. So we've actually gone 1 minute over our hour. We've used up that slot very quickly, and we haven't actually had a chance to get through questions. So I apologise for that, but please feel free, if you wanted to reach out directly to any of the panellists that were on today's session, please feel free to do so. I wanted to say thank you to Tony and to Magda for joining us today, and also to our virtual audience for taking an hour out of your day and joining us. The presentation will be, and the recording of today's presentation will be sent out to all registrants following the broadcast. And finally, just quickly, please feel free to join us for our third in the series of webinars on September the 6th, where we'll continue our conversations around privacy and compliance, but more importantly around data risk versus operational performance. So thank you very much for joining us today. And on that note, I'll say goodbye. Thanks, everyone.